I used to think investing was this scary, complicated thing that only rich people with finance degrees could understand. I thought I needed thousands of dollars to start, that I'd lose all my money if the market crashed, and that I'd have to spend hours every day researching companies and watching stock charts. I don't think any of those things anymore, but most people still do, and they're exactly what's keeping people from building wealth themselves. So in this video, I'm debunking the biggest myths about investing that are probably holding you back right now, because once you understand what investing actually can look like and what it's not, you will realize it's way simpler and way less scary than you think. So let's get into it. So the first myth is that you need thousands of dollars to start investing. And I get why people think this, because when you hear about investing, you hear about people buying shares of expensive companies and you think you need thousands just to get started. But that's not actually how most people invest. Most people don't buy individual company stocks at all. Instead, they invest in something that is called an ETF. Now, I know that sounds like finance jargon, but stay with me because it's actually quite simple. An ETF is basically a basket of hundreds or even thousands of companies that are all grouped together into one fund. So instead of buying just Apple, you're buying a tiny piece of Apple, Microsoft, Amazon, Google, and literally thousands of other companies all at once. This is just an example. There's many different ETFs out there. And here's why that matters for the how much money do I need to invest question. Because you're not buying individual expensive stocks, you can start with way less money because an ETF is usually way cheaper than an individual stock. For example, one of the ETFs in my portfolio only costs $8 per share. And a lot of platforms now let you buy fractional shares as well, which means that if an ETF costs $100 per share and you only have 50, then you could buy half of that share. So you can literally start investing with $10 or $20. The barrier to entry is basically non-existent at this point. Remember that you don't invest because you're already wealthy, you invest to build wealth. And this is a big mindset shift that I really had to make when I started learning about investing, because before I really thought it's something that you do when you're already wealthy, but that couldn't be farther from the truth. All right, the next myth, investing is basically gambling and you'll lose all your money. I think this fear comes from hearing horror stories about people losing money in the stock market, but there's a big difference between gambling and investing. Gambling is betting on an uncertain outcome with no underlying value. You're just hoping to get lucky. Investing is buying ownership in real companies that make real products and generate real profit over time. Now, is investing risk-free? Nothing is 100% risk-free. But what you need to understand is that if you look at the history of the stock market, after every single crash, and I literally mean every single one, the market has always recovered and gone on to reach new all-time highs. The 2008 financial crisis, we recovered from that. The COVID-19 crash, we recovered from that in months. The trend has always been upward over the long term. So yes, the market will go up and down. But if you invest for the long term and you don't panic sell when it drops, then according to history, your money should recover and grow. Now, if you've heard about people losing money in the stock market, they most likely either panicked and sold at the bottom, or they invested in risky individual stocks without truly understanding them. But if you invest in a diversified ETF or index fund, hold it for years, the risk is much lower than people think. Now let's talk about the next myth. You need to wait for the right moment to invest, or you've already missed the right moment. This one kills me because it keeps so many people sitting on the sidelines. Either they think the market is too high right now, so they wait for it to drop, or they think things feel uncertain, so they're just gonna wait for things to calm down. Maybe someone told them the market is gonna crash or anything like that. The problem here is nobody knows where the top is. You don't, I don't, the financial experts that talk in the media and pretend they know, they don't either. So if you're waiting for the market to crash so that you can buy in at a lower price, you could be waiting forever, because what if it doesn't crash? What if it just keeps going up and up and up for the next 5 years? Then you've spent 5 years sitting on the sidelines, earning nothing on your money, while everyone who was already invested kept making returns. And I have fallen into this trap myself, so I do truly get it. Back in the day, I waited for a dip that never came and the market just kept going up, and every month that I waited was a month of growth that I missed. Research actually shows what works instead of trying to time the market, and it's the complete opposite approach. So people who do try to time the market, which is a different way of saying buying in low and selling high, they usually end up making less money than people who just invest consistently around the same time, let's say for example monthly, and they stay invested, because you cannot predict when the best days in the market are coming. And the only way to benefit from them is to already be invested when they happen. So just don't try to time the market. Start, stay consistent, and let time do its job. The next myth is you need to be a finance expert to invest. And honestly, I think this myth exists on purpose because the finance industry has made investing look way more complicated than it actually is. They use jargon, they overcomplicate things, and they make you feel like you need a degree just to understand all of it. And that serves them because if you feel like you can't do it yourself, you're more likely to pay someone else to manage your money for you. The truth is, investing can be really simple once you understand a few basic concepts. I'm not saying there's nothing to learn here because there is. Obviously, you need to learn some of the basics, but you don't need to become a finance expert to do so. You don't need to read company financial reports. You don't need to analyze balance sheets, and you don't need to sit there monitoring stock charts all day trying to figure out when to buy and sell. All of that is what active investors do, and active investors are people who try to pick individual winning stocks and time the market. Both of those are not things that you should be doing. With passive investing, you're not doing any of that. You're just investing in diversified funds that spread out your money across hundreds or even thousands of companies. So you're not trying to bet on one company doing well. You're basically betting on the overall market growing over time, which it always has. And none of that requires you to be an expert. It just requires you to understand the foundation, make a plan, and stay consistent. So yes, you do need to put in some research upfront to understand how all of it works, which you're basically already doing because you're watching this video and you're gonna watch more of my channel afterwards. But once you get it, it's actually pretty straightforward. And that's what I'm here to help you with as well, breaking down the jargon and making it simple. Next myth, you need to constantly watch the stock market and check your investments every day. So we've already touched upon this a little bit, but if you're passive investing, you should be barely checking your investing account at all. In fact, checking it too often is actually bad for you and also bad for your returns because when you check every day or every week, you're going to see it go down sometimes and that's going to stress you out. And maybe it makes you want to sell or you believe that you can time the market after all. But we're investing for the long term. So what happens today or this week or even this year doesn't really matter. I personally log into my investment account maybe once a month just because I'm curious, not because I need to, and sometimes less. And when I log in, I literally look at it for 30 seconds. And I log out again because I don't actually need to do anything. I just need to watch it grow because I know my strategy. I know that investing consistently every month is going to be the thing that makes my money grow most for me. So set it up, automate it, and go live your life. That's the whole point of passive investing. Now, the last myth that I want to talk about is that investing is only for older people or people planning for retirement. I used to think this. I thought that investing is something that you do when you're like 50 or 60 and you don't have anything else to do with your money. But the opposite of that is actually true. The earlier you start, the less money you have to contribute to your investing account in order to reach the same goal. So let's say you start investing $200 a month at age 25. By the time you're 65, you will have over $1.2 million. But if you wait until you're 35 to start, which is only 10 years later, then you will only have around $450,000 only in quotation marks, but it's almost 1/3 of the money that you would have had if you started earlier. The more time you give your money to grow, the more it will grow. That is the power of starting early. And investing definitely isn't just about retirement. It's about creating options for your entire life. It's about building wealth. So you could use it to travel. You could use it to buy a home. You could use it to retire early. There's so many things that you can do with investing, no matter if you're young or old. If you've been putting off investing because of any of these myths, I hope this video showed you that it's way simpler and way less scary than you think. And if you want the full step-by-step on how to actually start investing, which ETFs to buy, what platform to use, all of that, then I do have a free masterclass where I walk you through everything. And if this was helpful, I'd love it if you liked and subscribed because I will keep breaking money down in a way that actually makes sense.